Market news now. Asian markets enjoyed healthy buying interest on Wednesday morning on much needed good news on the China-US trade talks, while energy firms rallied with oil prices, though the pound remained beaten down by Brexit woes. A flurry of positive developments in the tariff standoff between the world's top economies provided some early Christmas cheer on trading floors, fueling hopes that they can avert an all-out trade war. Asian markets staged a rally which saw the Nikkei add 2.2% to its tally for the year, closing at 21,602 points. Hong Kong's Hang Seng moved 1.7% to end of the day at 26,200, while the Shanghai Composite Index edged up 0.3% to close out at 2,602. The S&P 500 and the Dow ended a volatile session down slightly on Tuesday as investor optimism over China-US trade talks was offset by US President Donald Trump's threat to shut down the US government and by political uncertainty in Britain. The industrial was 0.2% cheaper at close, while the S&P 500 lost close to 1%. But it was a much better day for the tech counters as the Nasdaq Composite added 11 points to close out at 7,031. For more on the markets, we cross to Arabile Gumede at the Johannesburg Stock Exchange. Good afternoon, Arabile. A lot of green on the board behind you.
Yeah, certainly a whole host of green today, and it's a much better day across the board. Perhaps we're beginning to get some momentum. It's the second day of green. It hasn't been a time of late that we have had 2 days in a row of green territory. So hopefully we can keep the momentum going and get into some sort of Christmas rally. That will be quite interesting. 1.2% gain thus far today when it comes to the JSE and its counters. The likes of Goldfields doing fairly well as well. Despite what happens with South Africa's currency as well. So we'll unpack exactly what is moving markets. And of course, the international stories are quite key, and the sentiment out of those will certainly drive what's happening locally. But with that, let's unpack how the local and the European markets are faring. So as you can tell, the market in all green territory there across those boards. The counters themselves doing fairly well. So let's unpack exactly what's going on with the markets internationally and locally. Of course, Maudi Linzwana from Lehumo Capital joining us in studio. Maudi, thank you so much for the time, bud. 1 1/10% to the good. A second day in a row. We're just hoping for that Christmas rally now, aren't we?
Yeah, no, certainly. I mean, everybody's looking forward to that Santa Claus rally. I was a bit worried there at the beginning of the week. Monday was quite severely down, negative. And I thought we might be getting another week that looks like, the previous week. But from Tuesday, we had that positive sentiment coming through. Markets there registering a positive number. And today, we're continuing with that trend. So hopefully this is the beginning of an uptrend. Still early days, to call it that, because you've got a number of things really happening around the globe. In Britain, you've got, the whole Theresa May issues there, facing a no-confidence vote. And there are a number of other things. But I think on the positive is the fact that we are beginning to hear some positive statements coming from, the likes of Donald Trump and China that perhaps could mean that that trade war, we get to avoid it. And I think that will be positive for the world economy.
Yeah. If you touch on that, so let's start off with Brexit. However that moves, if we see a vote of no confidence in Theresa May become successful and thus her being kicked out of her seat as Prime Minister, the United Kingdom would have to get in, whether it be an interim or another Prime Minister as soon as possible, obviously, to ramp up into Brexit. Surely that weakens their economy quite substantially, sending a negative slew of sentiment across the globe, affecting emerging markets like ours as well.
Absolutely. I think you've summed it up very well. It's not good. The whole Brexit in itself, it's already an uncertainty. It has been like that, for the past 2 years, and there's still no resolution about the way forward. And I think that's what creates a lot of negativity, and that has had a negative impact already on the UK economy. And I think if we go into a change, I think here the Conservative Party is certainly scoring an own goal. What they should really be looking to do is to formalize and finalize this whole issue so that there can be more certainty, so that we can begin to talk about Britain outside of the EU. And creating further uncertainty is not helping them at all.
Yeah, and look, there's so many questions being asked. Perhaps they've even entered a recession, so there's so many questions being asked of them. But one nation as well that has got a few questions of whether they're in a recession or not because of their bond inversion is the United States.
Yeah.
So you get Trump and the US-China trade deal, and they've gotten onto a pause that will lead until March next year. Some murmurs and a tweet coming out from Donald Trump as well, stipulating that, wait on some good announcements that are set to come out here. It all bodes well, doesn't it? It adds to the impetus. It really creates a much better mood across the world.
Yeah. Look, I think Donald Trump is a very good master of this mind game. He is playing mind games. You look at where, the Chinese are and where the US are. I think they are still two worlds apart. And I think he's trying to play into their minds to say, I'm willing to scrap certain things if you come to the party. And I think it's just a part of the game that he's playing. What would happen after 90 days? I think some of the issues that the US is demanding are just too far too complex to be resolved within 90 days. And I think that's where the complexity of the whole thing is. I mean, for example, the whole intellectual property issue, it's very complex and it's not something that you can easily, resolve within 90 days. So I think there's still a lot of uncertainty around what the US is demanding and what China can provide. The arresting of the Huawei CFO, I think it was part of that game, and now she's released, and I think that obviously has a positive impact into what is happening today.
Yeah.
But I think there's still a lot of uncertainty going forward.
You can continue to tell that story, right? Let's perhaps now just talk about South Africa.
Yep.
We got inflation came out at 5.2%, a little higher than that 5.1% we experienced in the month of October. So November comes out at 5.2%. The questions that we might ask then is, does the 5.2% slight uptick justify the decision then made by the South African Reserve Bank, which, yes, may not just look into 1 month and does look 18 months ahead, but judging by the slow trajectory higher, would you say that it justifies the decision to increase interest rates?
Look, I was very critical of that move, Arabile, because I felt at that time that we had the rand, we had the rand, and we also had the oil price, falling, and that if you look forward now, the November number CPI that we're going to get next month will be significantly lower than the 5.2 that we've registered. Yes, it was an uptick, but I think we're going to see a massive downtrend on that number, a decline on that CPI number, given the fact that will now register the lower oil price and a stronger rand. Yes, you can talk about things reversing now with the rand above 14 rand, but I think looking at the CPI going forward should really remain within a reasonable,
They could have afforded to have waited, perhaps.
They could have afforded to wait, especially when you've got the economy that's looking to emerge out of the recession. You need to stimulate it from all cylinders, both in a physical form, but also play the monetary physical stimulus. So it should be a combination of both policies.
Yeah. Maudi, appreciate your time, but thank you so much for that. 1 1/10% to the good there for the all share, 14 Rand 30 odd against the US dollar for the South African Rand. It's all green across the board. 5.2% inflation, having seen that, still remain within the target band, but perhaps 4.5% is really the mark that the South African Reserve Bank is looking for, and that will determine their pace when it comes to interest rate increases from future. We'll hopefully find out from the South African Reserve Bank soon enough, and that will be of keen interest. For now, however, we'll keep watching the market and how it fares by close of trade, but that's where the buck stops this afternoon. Zinga joining you right after this.